Today we're joined by Graham Rodford, CEO of Archax. Archax has positioned itself at the intersection of traditional capital markets and digital assets, not as an exchange, not as any other kind of number of things, but as an actual regulated institutional grade platform for digital assets, funds, real world asset tokenization. These guys have been around for a handful of years at this point in time. Back in my old deep diving days, I used to like digging into the Archax stuff as well. But that being said, nothing that you hear here is financial advice. Huge shout out to everybody that supports Genfinity, XTC, Hedera, Algorand, Hashpack, and more. But I'm going to hop in. And Graham, thank you so much for joining. It's great to finally do this interview. I've interviewed Archax before, but never had the opportunity to interview you, sir. And thanks for joining us today.
Oh, real pleasure to be here. Thanks for having me.
So I want to kick off here. And for those that aren't aware, but may have heard the name Archax, because you guys are everywhere in the blockchain space, how would you describe what Archax is and what role it plays in the market?
Yeah, I guess we've been around 8 years now, set up in 2018. Backgrounds are all in traditional financial services. And the genesis of us really is realizing that not everything that traded on a blockchain was unregulated, and that if everything was to be moving on chain as we thought it would, that institutions would need someone credible to face. So 2018, we set up the UK's first regulated digital asset securities broker, custodian, exchange in the UK, with a view that the day would come where everything moves on chain. And it's fair to say that it didn't happen as rapidly as we'd hoped, but we're now at a point where every institution is talking about what we've built and what our vision was. So in the way we position ourselves is, if you're trying to create a token, create a digital security, if you need it custody, if you need it traded, Archax is a place that can do all of that and help institutions in their journey.
Yeah, and I think it's a constant, I think, battle. Whenever you're out there on the front lines of like crypto Twitter, it always seems like it's so interesting, because a lot of conversations seem to focus on technology first, but it seems like real adoption is kind of underpinned by market structure. And I would love if you could maybe talk a little bit about that, about focusing on that structure and making sure that it's in place so that all sorts of cool stuff can be kind of built on top of it and innovation can be supported.
Yeah, the founders of Archax and a lot of our senior staff are all from regulated institutions, so it's just really ingrained in our DNA. And so our approach has always been, if you're going to deal with regulated products, you need to do it the right way. Now, there are others in the marketplace that have gone down a different path, and perhaps they're technologists that didn't really understand regulation, and they kind of went at good innovative solutions. And a lot of them got their knuckles rapped or got into trouble. Whereas we've tried to say, okay, if we do this properly, then institutions won't mind facing us, because we're the credible people in town. So we kind of took the approach, okay, we need to be a credible regulated party, but that's obviously that's a hard path. Costs a lot of money to be regulated. It takes a lot of time to look at all of these rules. When you're speaking to every legal counsel, you're exploring things that have never been done before. When tokens represent certain assets that are transferring between different venues globally, there's a lot of untrodden paths to go through. So it's a hard journey, but really in the last couple of years, we've started to see the value of regulation. We speak to a lot of the large institutions now who are looking for a footprint in the market. There's a lot of those crypto firms that are looking to find some sort of regulated partner to work with. So we're in a good spot right now. It's been hard, but there's no doubt the market is moving in toward a more regulated space.
Yeah, this has been a really interesting past for those of us that have been here since there's some real OGs like the 2009, 10, 11, but I've been here since 2016 or 17, and this past year and a half has been really interesting. And I think one of the things that surprises me most is that the mass populace still definitely doesn't understand or even know what's kind of coming or what's about to happen. And you guys are very intentional about focusing not just on like the crypto asset standpoint, but on tokenizing real world assets, on actually bringing kind of this flywheel effect to all markets and being kind of one of the integrators there. I guess the question that I have for you is, how do you guys look at tokenization when you explain this to people, or what do you think tokenization kind of is going to do to the wider kind of capital markets out there that exist in the wild, and why are all these assets being tokenized, basically? Like,
Yeah, I think my background is an accountant, boringly enough, and I think of things in terms of ledgers, and what tokenization is to me is a record of ownership of something. So, if it's a Vodafone share, if it's Ethereum, whatever it is, whoever owns it is maintained on a ledger. Now, if it was a traditional company, you could put the equity on a spreadsheet, on a bit of paper. It wouldn't really matter. You've got to maintain a record of ownership. And when you move that onto a blockchain, that becomes tokenization. But the beautiful thing about it being on a blockchain is now you've got something that is transferable, that the holder of the asset can transfer it. And when you've got digital cash existing on the same technology as well, it's completely transformational. So in the past, if I log into my brokerage account, I might have, you own Vodafone or money market funds or whatever it is. It's kind of a dumb asset, right? I can't do anything with it. I can't transfer it. It's great. I hold it, but that's it. If I want to do something with cash, I need to sell it, get the cash, then do whatever I needed to do. But if you've got an asset that can be transferred, if I can take that asset in my brokerage account and I can pay for something with it, if I can borrow against it, if I can use it as collateral against a loan, suddenly I've transformed the exact same asset into something more useful. So it's the same risk return, but more utility. So this, what I've started saying is it's the same asset, but better. So a lot of people think tokenized assets are completely new assets. That there may be some, but for a lot of the assets that most people talk about, what we're doing is we're unlocking value and making these things have more potential. And that can go for, houses on the blockchain, cars, equity, debt, carbon credits, whatever it is. If it's on a blockchain, it has a lot more utility.
yeah, I think that's what we're seeing too. I mean, I know, I think it was like maybe 2 or 3 months ago, the NASDAQ filed with the SEC to essentially have like a digital twin version of the stock market where, and you read through those filings and it's like you would literally have the same rights and guarantees with a normal asset as you would on kind of the tokenized version of the stock market. So the assets in and of themselves are the same thing fundamentally. But as you mentioned, you're just unlocking additional value. One thing that's interesting is a couple of months ago, I found, so even if you look in like the UK, which I think is probably relevant to you, the Financial Conduct Authority in the UK put out a forward-thinking study about what tokenization is going to open up for the population in the UK. And basically what they were saying was, which was super smart, they're like, tokenization essentially can unlock all of these different asset classes for people that just historically aren't participating in all these different asset classes, whether it's real estate and equity, stock, whatever it is. But they said something really smart. They're like, just because people can do it doesn't mean they necessarily should unless they're educated enough to understand what they're getting into. So I think the democratization of finance is really interesting. And that's maybe something I'm curious your take on this. Like, what do you think that this technology, what tokenization is going to open up for everyday people in comparison to what kind of exists now, where you have the ultra wealthy doing all sorts of whatever they want?
Yeah, I guess in the start of our tokenization journey, and a lot of people, there's this kind of talk about access, capital markets, democratization, fractionalization. That's all true. We're looking at fractionalizing real estate, which is if someone wants to get on the real estate ladder and they can't afford to, fractionally owning something is worthwhile. If you look at private equity shares, there's a few crowdfunding platforms in the UK like Crowdcube or Seedrs. Quite often you can go and buy these assets, but then you might be stuck in a liquid holding. And if you could transfer it or borrow against it, perhaps you'd be more likely to do it. But what I think is really interesting, especially about the last 6 months, is like we've got this big societal shift going on. And I think blockchain's part of it. Certainly everything we've talked about seems to be coming true. But in parallel with this, you've got this, increased reliance on short videos on social media platforms. You've got AI coming where even in the last month, I've noticed in work the fact that technology is becoming a commodity. You can build things pretty quickly. So I think, well, firstly, regulation is a bit of a moat for us. But secondly, where these things are going is going to be pretty exceptional. You've got people developing mini apps where they can transact with each other. We see this already on chat channels where people have different payment abilities. But if you start combining that with tokenized assets where people can own fractional amounts of things and start transferring them as payments, and then you kind of combine that with AI and the speed of and the rapidity of development, I think we've got a really changing society and financial market all happening at the same time. So it's going to be an interesting period over the next couple of years, quite seeing how these assets, cash, platforms all evolve together.
Yeah, so there's a guy in one community, the XRP community, that has said, he says a term that I think is super interesting, which he this was like a couple of years ago, because you have DLT, you have AI, you have digital identity, you have all, and as you mentioned, the attention economy, where everything is faster, quicker, more about instant gratification and all that other stuff. He basically says we're at this inflection point where it's a Cambrian explosion for basically humanity as a whole. I think you guys from a tokenized RWA standpoint, I think one thing that we don't even talk about yet because it's so hard to measure right now is like I believe that our data, our individual data, how we interact on a daily basis is a real world asset. It's just how do you represent that right now? And I think it's going to be super interesting to look out a decade or 15 years from now with all the stuff AI does. Right now, platforms like Twitter and X and Facebook and Meta and all these things are free because we're the product. But I think we get put back into that value loop at some point. It's going to be interesting to watch what happens. And I would hope that like authenticity becomes valuable because right now it's very hard to even tell what's real. That being, but I'm rambling because I get excited about this stuff. So institutions, I would say there's a huge shift over the past. I think under the hood, institutions have always been interested, but especially over the past 18 to 24 months, it seems like there is, the biggest entities on the planet are coming out and saying pretty much every asset is going to be tokenized at some point. You mentioned real estate. I mean, that's 300 to 400 trillion. When all is said and done, what has changed? I mean, you guys have relationships with a lot of these institutions and entities. What's changed over the past couple of years? Why are they taking digital assets in these, this space more seriously?
Yeah, I think from the start of Archax, we've had a lot of people come to us about tokenizing real estate. In the early days, it was developers or people that were really trying to raise money for their projects, but probably couldn't raise money elsewhere. So you kind of had this negative selection bias where they tried everything else, so they're like, okay, let's issue a token. And obviously, the struggle with raising money into that is, it's no more an interesting proposition if you put a token around it than it was before. But what we're seeing now is people with genuine successful businesses that come to us and say, you know what, I'm already doing quite well, but I've realized if I make real estate a 24/7 collateral use case which people can transact at a fractional amount, suddenly it adds this utility that can boost their business and was already an attractive proposition. So I think you've got this sophistication of offerings. People are realizing it's not about wrapping something that was bad, it's about creating extra utility around already attractive assets. And I think on the institution side, our journey has been first couple of years, most of the institutions were like, I'm not sure you're right about this. Then the next couple of years, they started getting strategic investment guys, innovation guys, and they were like, okay, I believe it. But they couldn't get the buy-in from the teams internally because they were all worried about their jobs. But now you've got, Jamie Dimon, Larry Fink, whoever it might be, sitting there saying everything Archax has been saying for the last 8 years, that tokenization is replacing everything. So you've got buy-in from the top pushing this culture down. So I think you've got this acceptance of it's happening. And then just stepping back, sorry, to connect it to something you said just now, which I think is really key. Identity is a really interesting thing because, back in our days before Archax, I used to work at a hedge fund company, and it was, reams of paper documents. You're signing, you're filling them out. Identity was a pain. A lot of the traditional fund administrators still operate like this. When I came over to crypto, you started noticing the crypto exchanges and other fintech platforms like Revolut having these onboarding processes that really the traditional companies didn't even realize. So like SumSub on Fido, any of these people that can get you onboarded pretty rapidly. And then I think you're starting to see this idea of zero knowledge proof and soul-bound tokens and this idea of self-sovereignty ID. So it won't be long before we stop sharing our passport with everyone around the planet. You retain your own data, your permission access to it somehow. And you're absolutely right. I start seeing it that when people use my data, whether for analytics purposes or something else, I'll start getting paid for that and be able to control who has it and who doesn't have access. So I think I think the AML KYC is a really interesting example of where new innovators have come along and managed to outpace some of the traditional guys with a process that they do all day long just by using technology.
Yeah, an interesting fact here. What I don't think most people realize is how widespread the adoption of this tech is going to be in the end game here. So even if you take supply chain, there's still law in place for hand signed bill of ladings, which means, and essentially, during shipping, somebody has to literally sign a piece of paper for something to either clear customs or leave, a port, and that that hand sign law goes back to the late 1800s. So actually, the UK, and this is just a total sidebar, but the UK is one of the first countries to start really putting forward-thinking digital documentation laws in place, and I think it's 2026 now. I want to say that was like 2023 or 2024. So that is still how far we have to come. And you think zero knowledge proof? The way I like to think of ZKP for people that might hear the acronym and might not know what it is, think about right now how you have to go to a doctor, and every different doctor you go to, you give your social security number and all this stuff for. But in the future, it's going to be to participate in something, you only have to give the minimum amounts of information to participate. So maybe if I sign up for a website, all they need to know is I'm in this state and I'm this age. They don't need to know my birth, or they don't need to know all this other crazy stuff. So yeah, you're right. And I think even identity, what's interesting to me is that people just assume that that's just the you and I type discussion. But all of these assets need to have identity too as they start coming on chain, which is interesting. And we talk about on chain, Graham, talk a little bit about multi-chain, because we see the traditional entities like DTCC even a week ago was like talking about different networks and criteria for different networks. And it seems like we're headed towards a multi-chain future. And you guys, I think, are probably better served than anybody to talk about this.
Yeah, I guess we've got close relationships, but we're also chain agnostic. I guess in the early days, we kind of realized, okay, it's quite hard to pick a chain and say, hey, everyone believes the same thing that we do. So we took the approach, as long as the chains are credible, as long as they're teams we can work with, as long as the rationale was there, we'd work with them. So, we work with a number at the moment. When we speak to the institutions, they all have different requirements. Some of them are just like, let's go for Ethereum. It's the biggest, it's the most widely used, it has the best infrastructure. Great. Others will be like, we can't use Ethereum because anyone can run a node, and so it could be run in a sanctioned jurisdiction. Maybe that's a problem. Some are like, we want privacy. Some of them have got grants from chains, so they want to work with them. The criteria is huge, but fundamentally, the token needs to be able to have the requirements you want. So, I mean, they tend to be pretty standardized, to be honest with you. Whitelists, blacklists, transferability, maybe pausing the chain as well. They all need some sort of good infrastructure. So in an ideal world, every chain would have a really good wallet infrastructure, borrow lend platform, a DEX. I think the way I always describe it, and this might be terrible, but I think of the networks like countries, and all of their native currencies are like the currencies to visit a country. And what causes demand for a currency is if people want to go there. And what makes people want to go there is fun things to do. So Ethereum has a lot of fun things to do. You can mint NFTs, you can go use Uniswap, Aave, Balance, or whatever. You can go and do a lot with your money there. Whereas some of the chains that don't have as much traction, a lot of people hold it because they think it's going up. But those guys, they need to work on their infrastructure. So a lot of what our pitch is with RWA is like, look, the RWA story is early right now. You might think Ethereum have done really well on the kind of unregulated side. Solana have done well on the meme coins, whatever it is. But RWA at the moment is really early, and within that RWA space or regulated financial asset space, we are talking over a quadrillion of assets. So it might be that people say Hedera, super fast, really lends itself to low latency trading. You can see secondary markets running on that. Whereas something more slowly, maybe, I don't know, maybe like real estate trading might take place on Ethereum. It costs a little bit more, but it doesn't matter that it's slow and it costs a lot more, and everyone around the world can get involved. So I reckon you might start to see some of the chains start to specialize a bit in what are really, really good at. And, Canton, obviously lately have been doing well with their privacy, which has struck a chord with a lot of people. So even though the chain has a little bit less retail adoption, a lot of the institutions are way more comfortable because they're just not out there publicly.
Yeah, I think, one thing that's been interesting to me to watch is for those of us that like reading like banking documents, which is like not anybody except for probably like a very few amount of people. Like I've been interested in like kind of deep diving into what some of these entities have been doing, and like from a stablecoin standpoint, it seems like the past 24 months have been huge for stablecoins and stablecoin adoption. I mean, we had the Genius Act in the United States, et cetera, et cetera. But kind of paying attention to under the hood, they've slowly been kind of talking about tokenized deposits and what that would look like. I know you guys have made a lot of traction with, I think Lloyd's Banking Group and some others. Can you talk about that difference? Because I think that confuses a lot of people, the difference between stablecoin adoption and tokenized deposits. And yeah,
Yeah, I guess back to something I said earlier. What's really different about this technology is that the cash and the asset can be on the same technology. So things which are familiar to anyone in financial services, delivery versus payment, you can create it. So I send a security, someone sends cash in, it happens automatically. Or if we've got a yield bearing asset, the dividends can be paid on chain, fixed income payments can be paid on chain, interest can be paid on chain. So the technology, once you believe all the assets are moving on chain, as I do, the catalyst for all of it is cash existing on chain. So for me, when people talk about stablecoin explosion, and people are really excited about it, most people seem to be investing and spending a lot of money in the infrastructure, when really, like, Tether and Circle are still absolutely dominating the market just because of their widespread adoption. The big difference, so obviously Tether and stablecoin, let's just assume that they're all backed by dollars in a bank and a token is issued, and obviously they don't pay any yield. And there's a lot of people looking at ways that they can pay yield. And on the other side of the equation, you've got banks which will issue a token to their clients backed by a pound or a dollar or whatever it is that they have in reserves. In the UK, at least, they will, I think, be protected by FCFS, deposit protection, but they're much more likely to be controlled. So one of the reasons Tether's been immensely successful is the lack of friction. This thing can transfer 24/7 pretty much and be used in DeFi, on sexes, to participate in primaries in a number of areas. And so much so that even in a 5% rate environment, no one cared to give up their rate. And then, a lot of the people that I speak to have got their money market funds, they're paying 4 or 5%, whatever it is. But it's hard to compete with Tether because of the friction involved. And tokenized deposits, kind of somewhere in between. They're going to be permissioned because they have to be banking clients. You're a bit more protected. They will pay rates. I doubt as high as some of the money market funds will, but higher than the stable coins. But they'll probably be used to, in the same way. I can't think of a good example other than Fortnite. You've got your V-Bucks on Fortnite and you can go and buy Fortnite skins or whatever. You'll be in a bank, you'll have the tokenized deposits, and you'll go to the digital asset marketplace and buy assets that the bank gives you access to. So my bank today has a brokerage link to it, and you can spend your money going buying shares, whatever. I think it's like that, but it's all digitally, and theoretically you can pull those assets off if you want. So I think you're right; they're absolutely close, but I think at the moment stablecoins are a bit more frictionless for the kind of Web3 economy, if you like. Whereas I think with tokenized deposits, we're seeing the future of regulated money.
yep. And I think one other thing that we've seen certainly with the enterprise and institutions coming on, and you mentioned Hedera and Canton, but there's obviously there's lots of players involved with a lot of these entities. But it seems like there was a narrative a few years ago that private networks were going to stay private and they were for the enterprise and institutions, and then there was kind of the public networks. But now it seems like it's more about programmable privacy for like where things have to be compliant and have to have privacy initiatives baked in. But it seems like there's definitely a knowledge, at least from the enterprise level, of like the value of public market liquidity and like what these public blockchains actually represent. What are your thoughts just on the crossover between the private to public, and how you kind of, obviously we speculate a little bit about how this plays out, but yeah.
Yeah, I mean, we talked earlier about this kind of merging of what, or everything, this inflection point in technology. And I know I said the future of regulated money for tokenized deposits just now, but just to, I think banks are in trouble if they don't embrace this technology. in that you've got this situation at the moment where there was already a blurred line between what is a bank and what is a payment company when you started to see these EMI money transmitter companies start to look like neobanks. And now you've got this kind of wallet address and account number merging as well. So like browser extension equals neobank equals bank. And I see a similar thing happening with the private and public. I think people will pick the appropriate route to get access to the product. And I think people care less about what they're using, which jurisdiction it's from. They just want the best product. So to give you a kind of very general example, rates have been 4 or 5%. I don't know many people that are getting more than 1 2% on their current account. But everyone that I'm speaking to at the moment is talking about yield bearing stablecoins and earn products. And those products are paying 3 4%. Like a lot of the new entrants into the market are creating rates which the current incumbents can't do. So I think you've got this situation where maybe the traditional guys like private, but the children of the future, I'm not sure they care so much. I'm not sure they care whether you're based in London or a small jurisdiction. I'm not sure they care where your banking license is. What they really care about is it protected? Am I getting a good yield? Can I transfer it at the click of a button? Is everything available to me right now? They much more care about that usability than they do about some of the things which we may have ascribed value to in the past.
100%. And I think, as you mentioned earlier, with where AI and agentic AI and agent to agent payments and all this stuff is going, I would imagine we're headed towards a future potentially, where AI, you can use tooling to just pathfind for you. Like literally, you use an agent to do what you want it to do. And I don't think we're there yet, and I probably wouldn't dial in that far to an agent yet, but I think we're headed there. So what's interesting to me, and we're going to ramp down here, is if I look to 2021, I believe we were probably around $200 million in tokenized real world assets. And we looked at 2020, let's say January 2026. This is not a direct number, but let's say somewhere around 50 billion. Where do you feel like digital capital markets are actually going? Because even if you look and try to, 2030, you have ranging numbers from every single entity and institution out there for how many assets are going to be tokenized. But I think that's kind of, I don't even know about predicting that, if that makes sense, but I care more about like, what's the big picture? Like, where are we actually headed as a society with digital capital markets? What are we going to be able to do as people? What are institutions going to be able to do? And what do you think it's going to look like?
Yeah, I think the danger with you've said it yourself, the danger with the number isn't just that it's hard to predict. It's that a lot of the people stating the number have agendas at the moment. So, I'm not, we're in this camp as well, right? We're all trying to be successful. We all know this is the future, but it's early stages. If you look into the RWA space, you'll find a lot of people talking about transactions they do themselves. You'll find a lot of people investing in each other. You'll find a lot of blockchains that are investing in things to, give balances to their chains. And I'm not saying that they're bad things. I'm just saying that finding the real demand is quite challenging. There is no doubt we're going from bottom left to top right. Like all of the large institutions I'm speaking to, they understand now when you're in the room. You might give them some new ideas of how to do it, but they know they want to tokenize. They know they want to release products to market. They know that the next iteration of a fund needs to have a digital share class or a real-time NAV or 24/7 composability. So it's going to grow. It's going to be billions of dollars by the end of the year. Quite how much that billions of dollars transfers around, I'm not so sure, but there is no doubt it's going to grow. And I think now, this year especially, is the time where we're going to move from a kind of, is this going to happen, to everyone's doing this.
It's interesting. I would love, you mentioned this year, what is on, you guys are super interesting to follow, by the way, because I'm always curious to see what you guys announce next as far as an integration standpoint, whether it be a network or whether it be more of like an initiative that you guys announce. So what is next for Archax in 2026? Yeah, I know you don't have to say anything that you can't announce, but yeah, just what are you excited about?
No, sure. I mean, we're not. It won't surprise. We're not sure of announcements. we're working on stuff, and we're trying to use that as a way to show institutions with the best partners to have. We've got a unique treasury product coming on, probably come out of stealth in the next couple of weeks. The idea is to create a 24/7 treasury type product that's eligible for collateral but easy to compose, to have composability with DeFi. So that's pretty exciting. We've got some good 24/7 solutions to stablecoin on and off that we're working on. We've got a really interesting kind of streaming yield payment from Hedera that we're going to be announcing pretty soon. So I think all of those things are interesting. Where we'd like to go this year is kind of start to actually ramp up the use cases. I think everyone's kind of a bit done with POCs and pilots and everything else, to be honest with you. What we really want to see, I mean, what potential investors in us want to see, frankly, every time they speak to us is, where's the growth? And you can point to the market and say it's coming in the future as much as you want, but people want to see assets flooding into these assets because that's the thing that really proves this is the future. So, we're going to be focusing a lot on that in the first half of this year, especially.
I remember back to, and I covered this, and it's just again a sidebar here as we end. But you enabled, and you guys did it, I think, on Hedera first, these synthetic pool tokens, and it was really interesting to me. So, for context, this is kind of something that represented a basket of money market funds from like leading asset managers. But then when you looked, it almost leads us towards a future where individuals are going to be able to pick and choose what they want to do, what allocations they have based on whatever. I mean, they could have, in the future, part of a fractional ownership of real estate, part of a money market fund, part of a digital whatever it is. And that really, was amazing to me to see, because it just puts things into context in a really easy way to understand of where we're heading as a future. I don't know if you have kind of like the idea behind that, but I thought it was really cool, Graham.
Yeah, no, look, pool tokens are they are really cool. That's the best way to think of them. So, the use cases are you can hold loads of tokens, put them in a portfolio. If you wanted to trade an index, I can tokenize the FTSE 100, put a wrap around it. You can now move 100 instruments with one transfer. And if you didn't want to invest in one, two of them, you can send them out of your pool. So you can create these bespoke portfolios. And then touching on what you said earlier, I fear for everyone's job in the future. So let's see where it goes to. But when you go to speak to your IFA, you usually say, "Oh, this is how much money I've got. This is my risk appetite." These questions, they're all if this then that questions that a computer can deal with. So imagine you just go to a website. This is my risk parameter. This is how much I'm willing to be exposed at risk, not a risk. It will just suggest what you buy and create the token, send you the custom-made wrapper, and there you go. And these kind of bespoke portfolios or risk-weighted assets are just one use case of how perhaps AI and blockchain can come together. But yeah, I think pool tokens are there's a lot more use cases out there for them. I'm pretty excited about the use case in financial services.
Well, I definitely want to make sure that everybody knows, give Graham a follow at Grodfather. You can go learn more about Archax at archax.com. Follow at ArchaxX with an EX. And the other one is, at Archax Crypto. And Graham, it's been awesome having you today. Please don't be a stranger. I'm looking forward to bringing you back hopefully a little bit later this year, because there's a lot of cool stuff coming. And that being said, hang out with me here for a second to make sure I get the recording. And thank you so much.
Yeah, no worries. Thanks for having me. Cheers.